Hi, I'm Danny Ecker in for Lisa Leiter. Here's what's happening in Chicago business today. Groupon today has offered its biggest deal ever in terms of locations served, half off a punch card to Quiznos restaurants nationwide. The deal is a bit different from typical daily deal offers from Groupon in that it's a punch card, which requires a buyer to repeat business. And joining me to put this deal in perspective is Crain senior reporter John Pletz, who broke the story on the Quiznos deal yesterday. John, thanks for joining us. So John, this punch card deal is a little different type of deal. What exactly is Groupon trying to prove with this deal?
Well, I think potentially what it will answer is a question of whether or not you can get customers to come back. I mean, that's really going to be the question for merchants, particularly those who aren't new businesses, is rather than just a one-time deal to get everybody in for a big discount, can you get those customers to come back? And that's really what is going to be important to merchants.
Meanwhile, in the background, speculation continues about a potential Groupon IPO. Now, LinkedIn, which is a fraction of the size of Groupon, raised its planned offering price 40% this week, which clearly highlights the appetite for web-related companies. How might that deal be related, and how soon could we know whether Groupon will be coming out with an IPO?
Well, LinkedIn's expected to go public on Thursday, and if there's a lot of appetite for those shares, that'll only further the demand for Groupon. That's one of the most widely anticipated IPOs alongside Facebook. It's going to be up to the people running Groupon and their investors as to whether or not they think the time is right to try a public offering.
Thanks, John. We'll be watching this deal all day. Thanks for joining us.
You're welcome.
Elsewhere on the tech front, Chicago-based food ordering website GrubHub is facing a lawsuit alleging that the site violates consumer fraud statutes as some restaurants charge higher prices to buyers without disclosing it. The suit comes from local law firm Edelson McGuire, which also took Groupon to court a year ago over expiration policies, and points to GrubHub competitor Seamless Web, which requires restaurants to charge the same prices to its customers. The firm is suing for damages for customers who have been charged higher prices than those who ordered from restaurants directly. GrubHub is one of Chicago's fastest growing online startups and denies the allegations but declined to comment on the specifics of the suit. Northbrook-based Allstate has announced that it will buy online auto insurance seller Esurance and, quote, compare Answer Financial in a deal expected to be valued about $1 billion. The move helps position the country's #2 insurer for better performance in the growing online sales arena rather than their primarily agent-based selling model. San Francisco-based Esurance wrote just under $900 million in auto insurance premiums last year, compared with more than $16 billion worth for Allstate. And in real estate news, the Leo Burnett building is under contract to be sold for around $400 million to banking giant UBS in the latest blockbuster downtown office building sale. The surge in such deals to $4.6 billion in the first quarter, up more than 300% from the same period a year ago, according to Real Capital data, comes mostly from the aggressive play of pension funds and insurance companies that are back in the game after sitting out during the recession, now pursuing so-called core properties. And those are just a few of the headlines we're following today. Be sure to stick with chicagobusiness.com for more breaking news throughout the day. Thanks for watching. We'll see you tomorrow.